What is up, guys? Morning, morning, morning. Let's just do it this way. Man, always, man, just a crazy morning. Welcome, everybody. If you're here, appreciate you hopping in. I'm going to throw some chat. Actually, here, I'll do a quick overlay for chat. If you're in, let's see, what can I not see? I cannot see Twitter. You're watching Twitter and you're on some of that stuff that I can't see. I cannot see the comments there, so apologies, but appreciate you guys hopping in. Anyways, man, oh man, I'm just watching this market and AMD just a complete face ripper to the upside. I got caught short, broke through my stop, and it just squeezed and squeezed and has not stopped since. That thing is just straight through its ranges. What's up, Orca? Appreciate you, man. Oh, I don't know why that's not showing up. So anyways, guys, appreciate you joining. If you don't know, my name is Jason, aka Paper Profit in the servers. And this is Paper Gains, where we go through our weekly trade plan and kind of hit a lot of the main headlines over the weekend, what we need to watch out for this week, and maybe a couple what's up, and maybe a couple trades and setups that we're looking for throughout the following week. So that said, if you guys have any tickers that you want to take a look at, go ahead, take the opportunity, throw it in the chat in YouTube, and then I'll pull them back before the end of the show and kind of get to it. I think last week, just a quick note on some of this. I'm going to go ahead and pop through. So last week we had, not a ton. Exxon, yeah, Exxon is a good one. I actually still like Exxon. I'm planning on doing a gap trading webinar, if you will, later on, probably before the end of this month. But Exxon is a good example. It took Exxon long over the weekend, gapped up, and right now sitting about a 50%. I call like the half gap retrace right here. So as long as Exxon can hold over 109, give or take, this should be poised to give us a little rally in the back half of the day. But anyways, yeah, so that's kind of gap trading rules. And my God, AMD is just ripping like just a face ripper. I was looking at these $100 calls. I'm like, no way. Sure enough, it's squeezing to the upside. And it's funny to me. I was looking at that, and Microsoft comes out with a note. It wasn't Friday. It was actually Thursday, saying that, we're actually not working with them on their, I think it was called Athena, on whatever that program was for the AI chipset. But, I think before this last week, we were looking at AMD, and actually what's up with Tesla? Tesla is, I'm actually sitting on a short 100 call and a short 170 call and a short 170 put. So I think it goes nowhere for right now. Just give it a little bit. But yeah, we're talking about AMD last week, and before they reported earnings, sure enough, we're looking at it, and it's like, there is no AI built into that stock whatsoever. They did go ahead and report earnings, and it wasn't really the best price action immediately. But what I'd say is after that, then the rumors came out about Microsoft working with them, and this is what we get. This is what happens when a stock that has no good news priced in whatsoever just gets a little bit of good news priced in, and it's just a massive. It's gone from what, $80 to 96. How much is that in a couple trading sessions? Yeah, in 4 trading sessions, up 17% and climbing. And it really looks like it wants to hit that $100 mark. But 92 was my level, was my stop level. I kind of just squeezed straight through that. And man, off to the races since then. But AMD is known to do this. I always had a hard time investing in AMD because I would see like it has this really weird personality where it'll be up like this, like 5+% one day, and then down the equivalent the very next day. So really hard for me to do any swings on AMD, and it's hard for me to hold a position, to be honest. But we'll see. Meta also is an interesting one too. Not Um, Looked like it was going to fall off a cliff. It was really close there for a second, but it just couldn't do it. So right now it's going to go up. And we got a lot of other stuff. Yeah, this is the Exxon bounce right here. Yeah, so I think Tesla, we're still peak earnings season. So this week, I believe, is the very tip of or the very peak of earnings. And while there's still other things, that are like AMD, who didn't have any good news priced in whatsoever. There's Tesla may be in trouble because there might be something better out there that people are looking at, aside from Tesla. And right now, I don't think Tesla's bad. It doesn't have a whole lot of bad news priced in. Um, if I get a shot at sub 150, maybe 140 on Tesla, yeah, I'm gonna be loading that. But for right now, I think it's kind of like it's kind of stalling a little bit. Otherwise, if we do get over that 175, I'll take a look at this. We'll use that as a chart. But if we get over that 175, I definitely think that we could kind of go for that gap fill. It's about 180, give or take. So interesting, yeah. Man, AMD, I'm just so in shock right now, like completely in shock. Those $100 calls, when it just broke through that daily range right now, they just exploded. Anyways, over the weekend, couple pieces to note. Over the weekend, Berkshire had their annual shareholder meeting. Really, there's a lot of stuff to take away from that, but one of them, we started talking about CREs, or commercial real estate, not too long ago, and that was one of the big takeaways, I believe, from that meeting, was that Charlie Munger comes out and says, like, he believes that there is a storm brewing in the CRA front. And this is back to that regional bank setup. The regional banks sold off like crazy. I believe it was Wednesday or Thursday. What's up, Base? Dude, hit that link too, dude. If you want to join, you're always welcome. Wednesday or Thursday sold off like crazy, and then massive amount of short covering right after that. And I think, yeah, there's probably a little bit of this, capitulation, if you will, exhaustion to the downside. It's slowing down today, but it's definitely still in a downtrend. And really, it's just, what's that next year to drop in the regional banks? It's going to be commercial real estate and credit requirements. So, when we talk about lending and things like that, in terms of commercial real estate, it's people that bought, apartment complex, or mostly not apartments, but mostly like buildings. We don't have a lot of people going back to work. Morgan Stanley, over the weekend, I believe it was, announced another 3,000 layoffs coming. And, Facebook laying off a ton of people, Google getting layoffs, Amazon layoffs, layoffs are coming. And a lot of that office real estate, I think there was a stat I was reading not too long ago, is like some commercial real estate's, what's the word? Oh, wow. Vacancy rates are up 75% from norm, which is, it's not like they're not 75% vacant, but if they were 30% vacancy rate normally, then you're looking at like 45% vacancy rates right now. And that's what that commercial real estate piece is really talking about. And so what happens is, if you took out loans on commercial real estate, let's say a building, usually something like that, you might actually be in like a variable rate, and you probably got loan money at a pretty low interest initially. Valuations were pretty good. Now, post pandemic, that commercial real estate is really not worth that much, and your interest rate all of a sudden is going through the roof, and that puts you in a pretty nasty bind. And from a business perspective, your balance sheet is totally upside down. So you're not paying for tenant improvements. You're not really able to raise rents necessarily, because you have so many vacancies. And it's just a tough spot to be in. And that's really what's going on right now. So anyways, moving forward, I think that's most of it. We got our last, what I believe is our last rate hike last week. The market initially took it as a sell-off. And for the most part, when we were looking at, and I'll pull this up here, when we were looking at the charts, last week, it was basically this 413.75 on SPY. And this is, one more time, we're just tagging this right here. And so this was, Where's my NFP candle? May. Right, guys. So this is May NFP low. This is the low right here. This is Friday, and this is the high, right? And so to me, this is super, super important. Ace was actually short with me this morning for some of this stuff. But the reason we would be looking at this is like, look, we opened, this is Friday's high, 413.67. That's such a critical level. I can take this and pull this all the way back to February, which is where that candle comes from. And this is the absolute high. Here's this February day right here. This is the NFP number. February NFP 413.67 right there, right? So this is the absolute high on that February NFP print, and this is the low 402. We come back to it, and we weren't able to hold above this. If we were able to hold above that 413.67 or whatever you want to call it, 413.75, then the entire market is in like a bullish setup. And coming into it, we were breaking above it, and we had kind of just like pushed really strong into it last week. Unfortunately, we're still in what I call like the death valley of SPY. So this is where we get caught in this typical kind of chop zone right here. So we're still in it. We're closer to the high end of it. But it was just kind of odd to me that Friday's NFP, we that was the high, right? So April NFP low is 406. That kind of got tested in the pre-market. And immediately 409.50 had been a key pivot that we were watching. It has been a key pivot that I've been watching for a while. So that was the April NFP high, and it just kind of like shot straight through that. So the only thing right now is that unless we're back above that 413, call it 70 level, trending for a while, it's really hard to say that we're going to be flying to the upside. That is the massive level that we have to hold above. At this point, since we've like contended with it so many times, I would probably say, you want to see like 2 weekly closes above it. Just if you're thinking from an investment perspective to be in the clear, but that is that key pivot that probably like all the large institutions are going to be looking at, and everyone else too. So this blue line here, this is the anchor VWAP from all-time highs sitting at 407. So right now we have a ton of support, just kind of building around 40, call it 409.50 down to 406. And if we do flush through that, possibly hit this 402, but anything lower than that, really, I'd say anything lower than 406 for the rest of the month, we are not in an uptrend. Between that 413 and 406, it's going to be choppy. That's all I can say. This is our current chop zone. Very small ranges to day trade, but if you can get a good entry, like our buddy Ace always somehow manages to do, you can get a pretty good day trade, a couple 100% sometimes. So moving forward, so we took I'm going to take a look really quick on oil. So I think it was 2 weeks ago, oil. So over the weekend, we're up 3% on crude oil. And if you guys remember, a week or so ago, there was a headline that OPEC was going to cut supply, and basically they're kind of like in cahoots with Russia, and that's where we are. They made an announcement that they were going to do that. Oil actually popped quite a bit. Let's see, popped a little bit back. I think it was around here, and then proceeded to sell back off. The thing is that they actually haven't done those supply cuts yet, so they haven't done anything. They're planning to put those into action. I believe it was at the end of this month. So fundamentally, we're still in this position where, crude has a little bit more upside to go. This is Exxon kind of bouncing right here, and I think that chart looks pretty constructive. We'll look at gold here in a second too. I'm going to move on to a couple of these data points. So the rest of the numbers that we got for last week. So we got manufacturing PMI, not a huge to do. Consensus 46.8. Remember, anything outside of anything that's really far away from consensus, that's what's going to move a market. So consensus 46.8. Actual number came at 47.1. Nothing major, but it is slowly kind of trending to the upside, which is good. Really good for for GDP. Speaking of GDP, some of the economists that I watch, they started to revise their forecasts so that I believe it was Q3 GDP was forecasted to be negative. Now they're pushing that out to like Q4. And again, it's just, the Fed had their forecasts to negative GDP prints this year. We'll see what that looks like moving forward. But yeah, it's everything's up to everything can change in a moment's instance. So that's the market that we're in right now. Very, very choppy. There's a few trending things. I think I will say gold looks really good, trending to the upside still, at least holding. But we'll see. Fed interest rate. So we did come in at 5.25. So I think previous we were coming in at 5%. So this is what we should see on a 2-year yield chart for the foreseeable future. Funny thing is that the bond market's actually trying to front run this a little bit. So some of the bonds were actually they were down this morning. Let's see this. I was looking at TLT. Yeah, so TLT down. I'm gonna pull up a quick, let's see. Yield spread. And this was pretty interesting to me. So if I look at the yields right now, the market's actually trying to say that the Fed needs to hike again, which, crazy. We'll see. But yeah, a lot of these were up, considerably up coming into the day. So this 30-year yield coming up, 20-year, and here's the 2-year yield. So peaked out right around 5%. This is kind of stalling here. So we'll see. This does not look like the market's pricing in any rate cuts just yet, though. I'll say that. All right. Move back. And this is really the biggest one. So there's two things that came out last Friday. So Thursday we got unit labor costs. So this is inflation. A lot of the noises of are our rates that we get paid, people's rates that they get paid are going up, but at the same time they're not going up as fast as inflation. And the weird part about that is, from a business perspective, if your labor costs go up too fast, that's negative for your earnings. And so that's part of what the market's going to start fighting right now. And I think, it really hasn't come into play just yet, but certain things, maybe some REITs, things like that, this may start to affect, you'll probably hear this a little bit more. The biggest surprise though was that non-farms payrolls number. So, in this market, it has been good news is bad news, bad news is good news. We're looking for, if good news is good news, that's some kind of warning that we might be nearing the end or some kind of trend flip. This is probably good news. 253,000 jobs taken on a market was expecting 180,000. So that's a huge beat. The thing about this is the beat, right? And if this is true, what the bond market is saying is that if the job market is this much stronger, if these numbers are right and the job market is actually that strong, well, then the Fed actually has more work to do on the rate side. So that's kind of what we're seeing in the bond market is like, well, maybe we're not done. I really don't think that we're going to get another hike, but we got a ways to go to the next meeting, but that's part of what we're seeing right now. So why the rates are up in the meantime is because of this NFP number right here, this 253,000 on 180K expected. That is a huge difference. And, initially coming into the FOMC report, I was like, well, okay, so we could have two scenarios, right? A hawkish pause or a dovish hike, meaning like, okay, so we're going to hike rates and, hike rates and have a hawkish tone. And that's mostly what we got. It was more of that was going to be the bear case. But for whatever reason, this NFP coming out, I mean, that just literally changed everything. So we'll see. This is a tough one. Totally shocking for me. But yeah, we'll have to see what the revisions look like. If there is, if this continues higher, we actually get some more stuff this week. So we get CPI and a whole host of other things today. Unemployment again. Here's the thing with the job market. Labor costs going up, more jobs are being taken. Unemployment rate, I think, is pretty peak, right? We actually came in at 3.4%. Consensus 3.6. This is like peak employment. It doesn't really get much better than that. And hourly earnings, this is where we are. This is our wages, our actual wages against inflation, 4.4%. So when we get into this coming week, let me see here. We actually do. So on Friday, we get CPI, which is this is where inflation actually is. Today, not too much, economic data ahead of us, or tomorrow. Wednesday is when the fireworks hit. So Wednesday we get CPI, or the inflation rate, and then Thursday we get the producer price index, which is producers inflation rate. Man, I'm just watching these charts every time I get on here. I need to start changing the time to maybe just do this post market or something Monday night, because Google is flying. I would be sending Google calls. That 106.50 was a huge level, and Meta bouncing. This market it's weird. Like, we're seeing so many things going up, but the stuff that's going up is things that were probably a little bit more discounted, price to earnings or price to free cash flow stuff. And in general, the indices are more or less static, right? So like 5 really hasn't gone anywhere. People are talking about, why is the VIX at this level? I'm like, because it hasn't gone anywhere for 2 years. We've been at the same exact level. Why would the VIX be anything other than, I don't know, 12, right? Like, honestly, that's where it probably should be. And then Friday we get consumer sentiment. So really nothing major until we get to Wednesday. So, maybe this carries through for a little bit. And then some of that hesitation will come in on Wednesday. And Wednesday is really what we need to watch out for. That said, we have a whole host of earnings too this week. So I believe it's tomorrow is like the peak day on earnings. PayPal's today after the close. That's an interesting one I'm going to watch. I think, PayPal's, again, it's one of those companies that has absolutely no good news priced into it whatsoever. Deservedly so. PayPal does not have a CEO. They do not have a COO right now. But that said, like, if they come out and they say something like, oh, okay, here's the new leadership team, there's no reason for the stock to rally now or without having some kind of leader with any kind of vision. But once they do get that, then the stock can actually start to get out of its way. But let me see, what's it at right now? Yeah, it's been $75 a share for, I mean, since March. Yeah, so for the last 2 months, and then that last quarter when the CEO said he was stepping off to the board, and the COO was leaving, there was just no reason for the stock to move at all. So it absolutely has not. So if something does come out for PayPal that gives this company a little bit of vision, great. Even if their earnings are really good, I have a hard time seeing this thing completely rally. If it does rally, maybe like 85, $90 at most. But without that clear leadership or that visionary at the helm, it's going to have a hard time being really investable. For now, it's kind of like something it's got value, but it's kind of floating out in no man's land. So it's a funky one. Devon Energy reports. A lot of our crew watches that. Airbnb is going to be an interesting one to me for sure right now. Ooh, and I'm just looking at a lot of these setups. Man, it just looks long. Meta, I'll have to do a fundamental analysis thing on that one later. But even though it's moved so much right here, it's not super expensive. Google's technically cheaper than Meta though at this point. And then Apple, by the way, yeah. So Apple I think that's a good recap, right? So a lot of better than feared is what I'm seeing, right? So we've had a ton of companies report so far. Coming into this quarter, we had a handful of misses. I think it was the quarter before last. I had probably one of the worst recordings across the board in terms of how many companies were actually missing earnings. But this last one has not been so bad, like not even close to the worst of the worst so far. Oxy is an interesting one. I'm not sure it's going to move a whole lot. I don't think it's a big earnings mover. A firm's gonna be telling for sure. So I'm gonna watch. I just put these. This is what I'm watching right now. So a firm, if they have a lot of charge offs, things like that, they're still working with Amazon for that buy now, pay later stuff. I don't think the stock's gonna do anything. You never know. Win. I'm long win right now. If you look at LVS, MGM, DraftKings, talk about like a breakout. DraftKings, I'm going to give it a couple days to breathe. It was a little sideways today, but that stock looked, what a ripper to the upside. Did you guys know DraftKings had like 80% increase in revenue? Like that is wild. So DraftKings has good news priced in now. I think what the market's really going to care about is if they have what their cost of customer acquisition is. That's really always been DraftKings kind of challenge. On another note, Warner Brothers Discovery. So you guys know I'm long Warner Brothers. I actually bought some shares, just equity, no options. I bought equity in that post market or pre market dump. I wasn't even thinking that it would give us like this full blown reversal, but this is one where it's cheap to me. There really was no good news priced in. I think your peak losses, if you will. So again, we'll see, but this is a good example of. Here, I'll just pull it up. Warner Brothers is a good example of what I want to see for what I want to see for a like reversal pattern, right? So if a company has bad earnings, it's bad earnings, but good price action, like immediately bought up. This is your textbook reversal setup right here. And this, if you guys remember, sorry, here was your spot, and I was looking at this kind of level here. This is why I was buying in the pre-market. So this order block, just about $12. We'll see if it holds. It's a big reversal right now. It has to get through $14 really and hold for the week. And then okay, it's definitively back on its uptrend. But if I go back to something like a GE, it was this quarter right here that I was like, okay, this is not good earnings, right? So this is November, not good earnings. And it was the exact same setup. So that day, I'm going to zoom in a little bit. This was their earnings candle. So it actually sold off all the way down to 55 on the stock. But the very following day, people were buying it up after a bad earnings support. This is what I'm looking for. And so what we have on Warner Brothers right now is exactly that type of setup. So I'm happy with this position. I don't need to like buy anymore, but we'll see, right? You guys know I'm going to talk about PFE. So Pfizer is another one. Just still long the stock, right? My average cost is about $39. So I'm a little bit underwater. They have a div X date on the 11th of this week. So it's the 8th right now. So I believe probably not today, but maybe tomorrow, if people are going to buy the stock for the dividend, they're going to have to start stepping in right around here. Meta is flying. Oh God. I'm missing all these trades for you guys, and PayPal starting to move. So PayPal, I think would have an earnings run up because again, there's no good news priced into that stock whatsoever right now. Pfizer, by the way, I still like Pfizer. They have a ton of stuff in the pipeline that they don't talk about, right? They have a weight loss drug. They have all kinds of stuff. And another one. So Roblox, sure, we can watch. Icon Enterprise, that big short report came out over last week. And so Blackstone is a big commercial real estate firm. So they're a huge, it's not their biggest piece, but they get a ton of press on that CRE part of that portfolio. So I'm definitely going to be watching Blackstone, see how the market treats their earnings report, see what the price action looks like. I think that'll give us a bit of a tell in terms of like how much bad news is already priced into that market. I think there's quite a bit of a bad news priced in, but we'll see. And then Disney reports Wednesday after the close. Disney had a great earnings report last quarter. It was a big beat on the parks. A lot of people were not expecting that part of the business to do well, and it really did. I'm long Disney. Trade Desk is one I am not long. That I kind of feel like maybe I should be. But again, looking at this chart, what would we? Trade Desk already has a lot of good stuff priced in, so I'm up in the air on that one. I wouldn't sell it if I was long, but I don't know that I'm going to go out and buy it. A funny one I'll tell you right now that I do think will be pretty good is Robinhood. Absolutely nothing good in this one. But we'll see. It might be one of those like bad earnings, but just turning the corner from an actual business perspective. I'm definitely interested to see how Robinhood acts after theirs. And then the only other one I really put on here was Tapestry. So Tapestry is like a little bit high end apparel, so like Coach and things like that. If you look back at some of the was LVMH, a lot of the high end. Yeah, I don't know this one. This is LVMH. This is forgot who they do, but like super high end fashion, Louis Vuitton, things like that. I mean, look this chart just on a weekly. High end stuff has been doing really good. That's all I'll say. So I think Tapestry, TPY is the ticker. TPR, sorry. TPR. Watch that. Would probably be decent. Cool. All right, guys. And I only had one other major one before we go into some of this stuff, but just as I grabbed this off like Earnings Whispers kind of Twitter page, I thought it was an interesting one. This is really like how are the markets trending in each sector post earnings. And everybody thought it was going to be pretty defensive. And it is defensive in terms of, like healthcare is still doing pretty well and utilities are doing really well. But of all the sectors, what's been really weird. So this is healthcare. Where can I see it? Construction spending here up 38 advancers. Like home builders and things like that has actually been doing pretty well as well as industrials. So industrials, home builders, and oddly enough, a lot of discretionary. So I think I would still keep my focus in those areas. Very select for me personally, very select view on tech, but I've missed a lot of tech too, right? I missed the Microsoft entry like sub 225. I was waiting for that 215. I did not miss Google, thankfully. I've not sold any Google at all. Yeah, I think we'll see, right? Like PayPal could be an interesting one if they have a story to tell. Right now, they just don't yet. I'm going to skip through. I have all this stuff, but I'm going to skip through to Wednesday. So Wednesday's the most important day of the week, right? Right now, so CPI I'll give you two. So headline inflation, which is inflation rate month over month, consensus is at 0.4%. Prior month, sorry, 0.1%. So if this comes in, I think if this comes in below expectations at all, because we had that NFP number that was like such a huge beat and way beyond any expectations. If CPI is actually going to be coming in at the same time, I think that could be the match that lights this fire, right? And I think it's going to be like the catalyst for both the bond market and the equity market. So they could both start rallying here after Wednesday, depending on what the CPI number comes in. So headline again, expected at 5% for the year-over-year number. Consensus for the headline month over month is 0.4%. If this comes in any lower than 0.4%, and that shows the market that, hey, look, some of this stuff that we've been working on, raising rates, is actually working. We really could fly. On the other hand, if it's higher, and all of a sudden, like, we haven't had anything, nothing's working in terms of bringing inflation down, and we have that really strong NFP report, well, that would be pretty bearish for the market. So, like, yeah, we need to pull it back quite a bit. So Wednesday is going to be a pretty big tell, a massive day for sure. Keep your eyes open, and again, make sure that you're watching those specific levels on the indices. 413.75 on SPY. That is, I mean, of all the levels, that is the level of all levels to watch for sure. Um, yeah, so that's the headline number. Core inflation is also important. So 0.4% is consensus, also prior. So again, core inflation, headline I think they're going to be watching mostly headline inflations this time. So we shall see. And then Thursday, we do have PPI. Probably not going to be a huge one, or jobs report, jobless claims. So again, look, we're like peak employment. I don't think jobless claims is really going to make a big difference one way or the other. All right, so let me pull this up and I will get to, here we are, right into the charts. Do you guys want to look at any indexes or get these forecasts out on my computer sets up? So crude doing well. I think here's, I'll go over a couple. So we went through SPY, right? 413, call it 70 is your critical level. This was, we opened exactly at Friday's high in the pre and started to fall off. So unless we're above that 413.70, expect some chop. This is, I mean, if we break above, bounce up off of it, yeah, go long for sure. But I would expect that we contend with this level on Wednesday, meaning that for now, we might just kind of be chopping sideways. We'll see. We do have a fair value gap to the downside right around that 408 level, 408 and a quarter. I got to measure this. Sorry, guys, one sec. I'm going to take, a lot of people ask me too, how do I measure a weekly range? I have this thing called the ADR, average daily range. I'm just going to take this, snag the top and the bottom, and that is going to give me a 14-day average range. That's a 14-week average range that I just got. That is literally that simple. So if this is the bottom, let's say we have this 20-day moving average right here that we could not fail below. So I would say that 20-day moving average is going to be critical level. You have a little volume shelf on it too. That's about 410. I'd say that 409.50. If we're below that 409.50, definitely going lower, clearly. But about 410.83 is that kind of like peak pivot, and just below the 20-day moving average. If we're below that, I would be trading for that 409.50 and then maybe that volume shelf or that fair value gap right around 408. And then call it quits right there. We have that anchor view up again from all-time high 407. And I don't want to be short below until we're below that 406 mark right here. So this is where that double bottom was. If we do get a double bottom, I would take this order block right here off that all-time high anchored VWAP, and that puts you at 407.83, possibly to snipe a long entry right there, 407.83, if you get that opportunity. Otherwise, above that 413.70, we know we're going higher, and that's like just becomes a little bull flag breakout. Just upside FYI, do you have a fair value gap at 416.78 that you do need to be aware of if we do break out of this? Cool. Upside max 420. So upside max would be 420 on SPY. We do have a little broadening range. Downside max would be, yeah, 40, about 404.50. So it might be even, there is another little order block right here. So if SPY decides to snipe this, which to me, I don't think this is going to come into play because it was already filled right here. But just it's here if we get that opportunity. I don't think we get there because again, it already got tagged. But that's about 405. All right, Qs I think are going to be important too this week. So 420 is going to be like that massive support here. Qs are doing a little bit better shorter term. So 420 right here on the Qs Unlike SPY, Qs are way outside of their little Death Valley consolidation range. So for now, it's a better trend on the Qs. And again, as long as it's over that 420, I think you're in the clear. And this week could see this kind of fair value gap fill right there. Really? 440. Wild. If we have an outsized move. Just a typical move would actually bring us to 337. Jeez, can't believe it. This thing looks like it's going higher though. Right now. If it breaks out here. Still available trade. Okay. Let's take a look. So you want to do Tesla? All right, we'll hit Tesla. I do want to tell you one more. So gold, I would definitely keep an eye on this chart. So gold looked like it was going to break out. We're definitely outside of this downtrend here. We had a little bit, I'll call it a kill candle. This chart right now, I think is going to consolidate for a bit. There's a fair value gap down to 1998. If this was GLD, ETF that's tradable. That's going to put you right around 184.90, just under 185. I'd look to maybe potentially add to the longs if it can hold over this 185 as a potential. Yeah, this broke out. I'd have to do a new chart. This thing flew. The thing about gold right now is if there's concern about this recession or what have you, gold is going to go up. This is that stagflation. So I did want to say stagflation. What are we talking about? We're talking about low growth. We're talking about higher for longer type of inflation. There's one trade and really only one trade available in that environment, and that is gold. That is the best performing asset, hands down, in that scenario. You see this? I had it here. So deflation, stagflation here. This is like a 50-year average chart. In a stagflation environment, equities tend to pull back. The only ones that do good are companies that are growing specifically in that environment. So you will see maybe some of the Qs continue. SPY as a whole goes flat, but your best performing assets, commodity, gold, and commodities. This is oil. So why am I still looking at oil? It's because of this. If we go to that stagflation, we have that supply shock type setup. Oil still goes higher, and then gold is also your best. That is the trade if we do have a stagflationary environment. Which again, it's still a little early. The first time I went through this slide, it was we're definitely in a disinflationary environment. So kind of shifting. Equities will go higher, treasuries will go higher. But if we do get more of these supply shocks, and you see that with inflation staying around for a lot longer than expected, expect commodities and gold to be your basically only and main trades out there. So that's why I keep an eye on gold. All right, let's go through this. I'm just going to go into multi-view. Oh, Tesla. So Tesla starts to break out last week, right? And I'm just going to look on this daily. We had this level right here, 169, that we closed really at the very top. And if you zoom into this, I think there's a bit of a volume shelf that we're looking at right here. So yes, Tesla is going to be bullish. It may take its sweet time filling this. We'll see. But this is a big fat volume shelf. And this is from this fair value gap way over here. Right. So here's your fair value gap. 182. Right. You have a 200-week moving average. Right now, we just kind of bounced off that 20-day moving average. I'll say this is not going up. If it does have a close below this like 170 level, that's the 20-day moving average. It must hold its 20-day moving average on Tesla. And that's, again, locked on the daily, like 20-day. Oops. 1. 20-day time frame day. Has to be that. If it's below the 20-day, it's going to go back into this kind of consolidation. But for now, yeah, it looks like Tesla to the upside for the rest of the week, as long as we're above this. And we should kind of play this little, I guess, moving average type ping pong. Here, we get a fair value gap from the pre. What I would probably do is I would take this 173 is like you're all clear. I'm sorry, above 173.80 is you're all clear. And I would take this up to that 180 plus level and possibly all the way up through this fair value gap and then stop. 183 would be hard stop, and then new trade begins, but not above that. Okay, so for now, let it breathe. Here's this kind of mark that you're dealing with right there, 174.88. 174.88, you see an open above and kind of retest it. Yeah, you should shoot through and fill the rest of this. Exxon. We'll take a look. So Exxon, this is what I was looking at in terms of those gap rules. So this is probably a pretty good example. So I'm going to take yet the low and the high and measure just a quick fib low to high, right? And so this yellow line is a 50% retrace from that post-market low and then the absolute high today, which if you're in the servers, look, we saw this. This blue line here is a 50-day moving average. Totally expected it to reject right there. And I want to see this hold this 50% gap, this half gap, right? So the distance from the gap of the low to the high, it's holding. This is like a 70% probability of a continuation in the back half of 2-day. So yeah, so I didn't sell, like I sold some this morning at that 50-day. I still have core position on. I think this is still good to go. And then here's the rest of the target. So essentially, let me just see if I can put this on a cleaner chart. You have a gap all the way up to 118. And if we're doing the reverse, low to high to low kind of retracement. So 112.77 is going to be that 50% retracement from this high to this low. That's where you got to really be careful and be super aware. Okay, well, the bears will start to come out right around here. Let's call it right there. This order block, right? I like this. I like that 112.70, just under 112.70. Pretty big volume shelf on this one also. If I'm just looking at this, similar to Tesla, look at this huge volume shelf. So I like this from that perspective as well, to fill this volume gap all the way through, at least to this lower consolidation, which would put that 115 really like my primary target, just to fill this volume shelf and then some. And then if it continues up, you do have an upside gap that I'd be looking to fill at 118. So that could play out over the next week and a half, something like that. Man, I want to show you Google. This thing is going crazy. All right, so Google 106.59. This is a funky looking chart. Here's the deal. So this is that prior high right here. This is the main pivot on Google. Anytime it gets, it'll typically bounce right around this 105. You can take it to at least 106.50. But right now we're starting to break one more time. It has a little trouble whenever it gets right here. But that 106.50, to me, that's basically the major piece. As long as it holds over this 106.50, yeah, we're still trending to the upside. I think this one stays in an upside trajectory for now. I think we get a lot higher. But that's just me. I think we get to this at least fair value gap right in here. Oops, not that one. This one that they missed, 116.60. Never got that filled. That still has to get done. And then maybe up to this 120. That would be ideal, but wishful thinking for now. Otherwise, earnings are out of the way. It's trending. I think we're good. AMD, AMD's big nasty breakout, to be honest. All right. So no Microsoft intervention here. None. Right. They are not working with Microsoft. This is just completely on their own accord. I thought AMD would at least pull back to test the top of this broken out downtrend. It did not. Here's that earnings thing again, flushed out and then immediately bought right back up and then extended. You're unfortunately kind of at your target here. So that trade, I would say, is probably over for the most part. What is this one from? I think that fair value gap is done. This one is valid. Yeah, this trade probably looks complete. All the rest of these basically filled. $100 hasn't completely filled. I mean, $100, maybe. Maybe. That'd be so wild. All right. What else did we want to do? What are your thoughts on SPY short term for today? Yeah. So SPY short term for today. I thought that we would. I have it on my other chart. So I really thought that SPY we would come back and retest this 409.50, but we didn't. And so pre-market, here's the level, right? So this is the pre-market kind of pivot. I don't know if this is pre or post, so sorry. This guy right here, the second that we really couldn't flush, we needed to get down below 412 to hold. And then I would have expected, first stop 410.86, second stop 409.50, possibly third stop 408. For right now, this is absolute chop fest to me. Yeah, I just don't think so. Today, I could see 413.37 and just fill this pre-market fair value gap here. But you need to have a close like this over these levels. So right now this is like your opening range. Call it here and here. So you could probably get to your opening range. You're right there. 413. Above that, you have this little tradable gap. But right now, just looking at this is consolidation. Lower high, lower high. If this is the high, that would be one more lower high. And I would take this short. See this volume shelf right here, 412. But it's long above 412.86. So above 412.86, this guy is long. And then your target 413. I should take this all the way up here, 413.50. So target 1, target 2, if you're above 412.85. Otherwise, intraday. Look, SPY is like some of the craziest. You have to have like beautiful execution to trade SPY. Yes, this is a 30-second chart. So for right now, I think maybe it comes back down. It could fill a fair value gap here at 412.50, 412.45, and maybe look something like this. If this rejects, then yeah, going down. But otherwise, it could do that. That's what I would look at. So somewhere around this little area. Be short here, but cover right around here and see how this reacts to this trend line and this little fair value gap. Probably right there. Cool. You got to reject. Yeah. It's rejecting here, but it's back and fill, right? This whole section, 412 to 4, this is half a point back and fill, back and fill, back and fill. So I would be super cautious. Meta. Yeah, Meta was a big one. So I want to look at Meta. So Meta had this purple line is a 200-week moving average. Meta had a massive volume shelf, has a massive volume shelf in here. No trade really got to get done. And this is from their earnings report. I think, you have to be aware. Here's that volume shelf. I want to take this, low to high fib retracement. It's kind of going to line up target 1, target 2, but that is not until you get a clean trade below below 230. This little pivot right here was what it's been battling with, and it's held. Right now we got a clean double bottom. That's currently above the 200-week moving average. Super short term. This is like your perfect little breakout. Let's see my meta chart. I have a different meta chart here. Yeah, no, it's the same one. So little breakout. Here's a fair value gap from yesterday, but we're above this yesterday's high. I think if you get a shot and you get a lower high, this is a long entry on this next lower high or higher low. Sorry, especially if you get something around this downtrend line. If it tests this downtrend and bounces up off of it, it's clearly a long. Or if it reclaims 235 or closes above 235, it's a tough one to swing. Cool. Tesla. Yeah. Tesla's consolidating, right? So yeah, we went through Tesla 20-day moving average. Cool. Exxon. I think that's it. If you guys don't have anything else, that's a wrap for now. Appreciate everybody hopping in. And again, if I leave you with anything, don't forget about gold, right? Like if you are trading right now, keep an eye on that gold chart. That's going to tell you a lot about how the market's currently reacting, what it's processing, and if it thinks there's like anything to be scared of at the moment. And then again, Wednesday is like the main day for all data points. And other than that, gave you a couple trades. I think PayPal, yeah, not a lot of good news priced in. Maybe it gets a little pop at least between now and earnings. But cool. All right, guys. Well, appreciate you again. Yeah, I will be on. I think we're on with Wolf later on in the week. And then next week, I'm actually on vacation. So probably no stream on Monday. I might try and do something a little bit later, maybe even a Sunday stream. We'll see. Just subscribe to the channel, click the little notification bell. Make sure you guys get alerted so that you don't miss anything. Other than that, you're good to go. Here's your Exxon, 50% half gap holding, very high probability for a back end rally. Cool. Adios.